What if I told you that two of the biggest opportunities in the market right now are sitting right in front of you and most people are completely sleeping on them? Not because the companies are weak, not because the numbers are bad, because the noise out there got everybody scared to move, and scared money doesn't make money. I've been watching these two setups build for weeks, running the charts, checking the data, and what I'm seeing is clear. The people who get positioned right now before the crowd wakes up are going to look back at this moment and be real glad they moved. We're talking about Reddit, ticker RDDT, and Google, ticker Google, two companies. One powerful partnership and a window that is not going to stay open forever. Before we get into it, if you're serious about learning how to build real wealth, hit that subscribe button right now. I break down real data in plain language every single week. No fluff, no filler, just what you actually need. Here's what we're covering today. We're going to break down Reddit, talk about where it's been, where it's going, what the smart money is doing, and exactly where you want to be looking to get in. Then we're pivoting to Google. And I'm going to show you why Warren Buffett's sitting on a 40% gain right now and why he's still not selling. And at the end, I'm tying these two together because this partnership is something you genuinely need to understand. Stay with me. Let's get into it. Let's start with Reddit. Now, I already know what some of you are thinking, Reddit. The website where people argue about everything and post memes all day. That Reddit? Yes, exactly that one. And I need you to let go of what you think Reddit is, because what Reddit actually is as a business in 2026 is a completely different story. Reddit is not just a social media platform. Reddit is a data empire. And in the age of artificial intelligence, data is the most valuable asset on the planet. Think about it. Reddit has been around for over 20 years. Millions of real people posting real opinions, real experiences, real conversations every single day. That is an ocean of human language that no AI company can just go build from scratch. And Google knows that. That's why Google signed a deal with Reddit worth $60 million per year just to train their AI system, Gemini, on Reddit's data. Let me say that again, $60 million every year, just for the data. Reddit isn't a message board. Reddit is infrastructure for the next generation of AI, and right now the market hasn't fully priced that in. Let's look at what the numbers are telling us. Reddit is currently trading around $168 a share. But when I run the numbers on what this company is actually worth based on its revenue trajectory and its partnerships, the fair value comes out closer to $200. That's a gap. And gaps like that are called opportunities. Now let's talk revenue growth. Not long ago, Reddit was pulling in about $550 million every quarter. Fast forward just 1 year out, and that number is projected to climb to $824 million per quarter. That is not a small jump. That is a company on a serious growth curve. And here's what I love about this. Reddit's debt situation is clean. They're carrying about $300 million in debt, but compare that to their $3.4 billion in assets, and you're looking at a debt ratio of roughly 8%. 8%. You know what Meta's ratio looks like right now? 38%. Reddit is carrying less debt proportionally than one of the biggest tech companies in the world. That tells me this company has room to grow, room to invest, and room to weather a storm if one comes. Now let me be straight with you because I'm not here to just hype you up without giving you the full picture. Reddit is volatile. That's just the truth. This stock was up at $263 back in January of 2026. It dropped all the way down to the 118 range. Then it climbed back up toward 168 where we are now. That is a massive swing. So if you're checking your portfolio every 30 minutes and you panic when you see red, this stock is going to test you. But volatility is not the same thing as weakness. For the prepared investor, volatility is not a threat. It's an invitation. The people who understood Reddit's fundamentals bought at 118. They didn't panic. They loaded up. And right now they're sitting on a beautiful position. The question is, are you going to understand this company well enough to do the same when the next dip comes? Or are you going to be on the sideline watching someone else make the move? So where do you actually want to get in? I'll give you the zones that the smart money is using. Watch the $135 to $147 range. That is the demand zone. That's where the big buyers consistently step in. Bank of America, JP Morgan, the institutions. They've been accumulating right in that range, at a 168 where it is right now. The PE ratio sits around 40. That's slightly elevated. You can start building a position here. Go light, don't go all in. The real opportunity is if we get a pullback into that 135 to 147 zone. That's when you want to be ready to move with conviction. And here's the technical signal to watch. If Reddit breaks above the 50% Fibonacci level, which sits right around $189, the next target is that previous high of 263. That's a serious move. And that's the kind of setup that changes what your portfolio looks like at the end of the year. Drop a comment below right now. Tell me, are you holding Reddit or just watching it? I read every comment and I want to know where you're at. Real quick, if this breakdown is giving you clarity, hit that like button right now. It helps more people find this who actually need it. I appreciate you. Let's keep it moving. Now let's talk about Google. Most people hear that name and think, okay, yeah, Google been around forever. Big company. Safe. Boring. And that right there is the misconception that is keeping people from one of the best setups in the market right now. Google is not a boring stock. Google is an AI war machine that most people are underestimating because they still think of it as a search engine. Here's what Google actually is in 2026. Google owns Gemini, one of the most powerful AI systems on the planet. And as we just covered, Gemini is being trained on Reddit's data through a $60 million annual deal. That means Google isn't just competing in AI. Google is funding the infrastructure of its own AI through strategic partnerships that give it a data advantage that is incredibly hard to replicate. Think about the full picture Google has, the AI. Google has the data pipeline through Reddit. Google has the cloud infrastructure. Google has YouTube. Google has the ad revenue engine generating tens of billions every single quarter. This is not a company trying to figure out AI. This is a company that is already there and building a moat that gets deeper every single month. Let's talk numbers. Google is currently trading around $385 a share. The PE ratio sits at about 29. Now compare that directly to Reddit's PE of 40. Google, a larger, more established, arguably safer company, is actually trading at a lower valuation multiple than Reddit right now. That's interesting. That tells me the market may be undervaluing what Google's AI business is going to generate over the next few years. Now here's where it gets really good. Warren Buffett bought Google shares back around November at approximately $278 a share. Where is Google trading today? Around $385. That's a 40% gain. Buffett is up 40%, and he's still holding. When one of the greatest investors who ever lived buys a stock and refuses to sell it even after a 40% run, that tells you something. That tells you he sees more upside ahead, and on top of that, Cathie Wood of ARK Invest. She sold some of her Google shares earlier this year. Then she turned around and bought back $32 million worth. After the stock already moved higher, smart money is not running from Google. Smart money is buying Google. Here's where I want you to pay attention, though. Tariffs are back in the conversation. Trump just announced plans to increase tariffs on the European Union. And anytime tariff talk heats up, the market gets nervous and we see pullbacks. That nervousness creates opportunity. The fundamentals of Google have not changed because of a tariff headline. The AI partnerships are still there. The revenue engine is still running. The moat is still growing. Macro fear creates discount windows. And discount windows are gifts for prepared investors. At a PE of 29, Google is one of the more reasonably priced mega-cap tech stocks out there right now. If you don't have a position in Google, seriously consider starting one, not all at once. Build it over time. If you already have a position and you're up, stay patient. Don't let short-term noise shake you out of a long-term winner. And if we get a pullback toward the 340 to 355 range, that's where I'd be looking to add aggressively. Watch the charts. Watch the macro news. Be ready. Let me bring this all together. Now, we are in the middle of an AI infrastructure build-out that is going to reshape every major industry over the next decade. The companies that own the data, the distribution, and the computing power are the ones that are going to win. Reddit owns the data, Google owns the distribution and the AI engine, and they're partners. When you understand both of these companies, you're not just picking two random stocks. You're positioning yourself at the intersection of the two most important trends in technology right now. That's not a coincidence. That's a thesis. If I had to prioritize between the two right now, Google is the steadier play, lower PE. Warren Buffett is holding its strong fundamentals across the board. If you want a position you can sleep at night holding, this is it. Make this your primary position. Reddit is the higher upside, higher volatility play. The fair value gap is real. The revenue growth is real. The AI data partnership is real, but be patient with your entry. Watch those demand zones between 135 and 147. If you can get in there, you're buying with real margin of safety. Here's what I want to leave you with. The market is always going to have noise. Tariffs, rate decisions, political headlines. It's always going to be something. The investors who build real wealth aren't the ones reacting to every headline. They're the ones who understand what they own, believe in it, and stay disciplined enough to buy when others are scared and hold when others are panicking. Proper preparation prevents poor performance. That's not just a saying, that's the whole game. You watch this entire video because you're trying to get better. You're trying to learn. That already puts you ahead of most people. Now take that energy and do something with it. If you got value out of this, hit that like button. It helps this channel reach more people who are out here trying to learn the right way. Subscribe if you want this type of analysis every single week, real breakdowns, real opportunities, no hype. And drop a comment. Tell me which one you're going with, Reddit, Google, or both. Let me know where you're at. I'll see you in the next one.